Welcome back to the channel. If you're new to investing and want to grow your money but don't know where to start, this video is for you. Today, I'll be breaking down the best investment strategies for beginners. Simple, smart, and low-risk approaches to help you build long-term wealth. Whether you're looking at stocks, real estate, or passive income investments, I've got you covered. Stick around to learn how to make your money work for you. Let's dive in. Investing is one of the most effective ways to build wealth over time. But for beginners, it can feel overwhelming. With so many investment options available, knowing where to start is crucial. The key to successful investing lies in understanding fundamental principles, setting clear goals, and choosing the right strategies that align with your financial objectives. Below are the top 5 investment strategies that can help beginners make informed decisions and grow their wealth effectively. 5. Understanding the basics of investing. Before jumping into specific investment strategies, it is essential to understand the basics of investing. Investing involves putting money in assets like stocks, bonds, real estate, or mutual funds with the expectation of generating returns over time. Unlike saving, which focuses on preserving money, investing aims to grow wealth through capital appreciation, dividends, or interest. A fundamental principle of investing is the relationship between risk and return. Higher-risk investments, such as stocks, typically offer greater potential returns, while lower-risk investments, such as bonds, provide stability but with lower returns. Beginners should also familiarize themselves with concepts such as diversification, which reduces risk by spreading investments across different assets, and compounding, where reinvesting returns leads to exponential growth over time. 4. Starting with a clear financial goal. Every successful investment journey begins with a clear financial goal. Before choosing investment options, beginners need to determine their primary objectives. Investing for retirement, buying a home, funding education, or simply growing wealth requires different approaches. The time horizon plays a significant role in deciding the right investment strategy. Short-term goals, typically within 1 to 3 years, require safer investments like high-yield savings accounts or government bonds. By consistently investing over time, beginners can build wealth gradually without worrying about short-term market movements. Medium-term goals spanning 3 to 10 years allow for a balanced mix of stocks and bonds, providing both growth and stability. Long-term goals of 10 years or more benefit from higher-risk investments, such as stocks and real estate, which offer greater potential for wealth accumulation. By defining specific goals and aligning investment choices accordingly, beginners can create a solid foundation for financial growth. 3. Diversification for risk management. One of the most effective investment strategies for beginners is diversification. It involves spreading investments across different asset classes to minimize risk. A well-diversified portfolio ensures that losses from poorly performing assets are offset by gains from others. Instead of investing all money into a single stock, a diversified portfolio includes multiple sectors, such as technology, healthcare, consumer goods, and real estate. Diversification can also be achieved through mutual funds, index funds, and exchange-traded funds, ETFs, which pool investments across various companies and industries. Geographical diversification is another key aspect, as investing in international markets reduces exposure to country-specific economic downturns. By diversifying investments, beginners can mitigate risks while increasing the chances of stable, long-term growth. 2. Investing in index funds and ETFs. For beginners, index funds and ETFs offer an excellent way to invest in the stock market with minimal risk and effort. These funds track the performance of a broad market index, such as the S&P 500, allowing investors to own a small portion of hundreds of companies without actively managing individual stocks. Index funds and ETFs are cost-effective because they require low management fees compared to actively managed funds. Additionally, they provide instant diversification and steady long-term returns, making them an ideal choice for beginners. The time horizon plays a significant role in deciding the right investment strategy. Short-term goals, typically within 1 to 3 years, require safer investments like high-yield savings accounts or government bonds. Medium-term goals spanning 3 to 10 years allow for a balanced mix of stocks and bonds, providing both growth and stability. Historical data shows that index funds consistently outperform most actively managed funds over extended periods, reinforcing their value as a simple yet powerful investment tool. By investing in a total stock market index fund or an ETF that follows a major index, beginners can build a strong and reliable portfolio with minimal maintenance. 1. Using dollar cost averaging for consistent growth. Dollar cost averaging, DCA, is a powerful investment strategy that helps beginners navigate market volatility. Instead of investing a lump sum all at once, DCA involves investing a fixed amount at regular intervals, such as monthly or quarterly. This approach ensures that investors buy more shares when prices are low and fewer shares when prices are high, ultimately reducing the impact of market fluctuations. For example, if an investor contributes $100 per month to an index fund, they will accumulate more shares during market downturns and fewer shares when prices rise. Over time, this method averages out the cost per share and leads to steady growth. DCA also helps investors develop discipline and avoid emotional decision-making, preventing panic selling during market declines. By consistently investing over time, beginners can build wealth gradually without worrying about short-term market movements. Conclusion: investing can seem intimidating at first, but with the right strategies, beginners can set themselves up for long-term success. Understanding investment basics, setting clear financial goals, diversifying a portfolio, choosing index funds and ETFs, and implementing dollar-cost averaging are all effective ways to grow wealth while managing risk. The key to successful investing is patience and consistency. By starting early and staying committed to a well-planned strategy, even small investments can grow significantly over time. Rather than trying to time the market or chase short-term gains, beginners should focus on building a diversified portfolio and letting time and compounding work in their favor. With the right mindset and strategies, anyone can achieve financial independence and long-term wealth through smart investing. And that wraps up the best investment strategies for beginners. Investing doesn't have to be complicated. Start small, stay consistent, and let your money grow over time. Which strategy are you most interested in? Drop a comment below. If you found this helpful, be sure to like, subscribe, and turn on notifications for more financial tips. Thanks for watching, and I'll see you in the next one.